Okay, guys, I am continuing this session again because I recorded it on my OBS studio, but when I was just editing, so I saw that the voice is totally not recorded. Okay, so I am recording again this, not recording. I am making it premiere on YouTube, and this is unlisted. Okay, I will share the link, then you can watch it. This will be not public, okay? Okay. So now I am continuing this session. So look at this. In the strategy, uh, main thing is liquidity. Okay, in the strategy, main thing is liquidity. What I learned them all in the session is the same, but I will just make it a buffer between both, because there we were interacting between us, that asking the problems, solutions. So I was interacting with them, but here nobody is with me right now. So I will go through directly into the strategy rules, how to maintain discipline with this strategy, and what's the terms and conditions to trade with this. Okay. Now, looking forward. First of all, you will be needed two indicators. Okay, you will be needed two indicators which are free. Okay, first of all, volume indicator. Second one is sessions and KZs 3.1. Okay, just search sessions. Okay, you will find it. Okay, then let me tell you the settings. Okay, there is a huge settings. There, like too many options. Okay, everything will be there. Okay, just take this one, official trading sessions, then uncheck all the ticks. Okay, then this will be ticked. Okay, uncheck this tick and uncheck this also. I had ticked this all, but there is no reason. Okay, so I uncheck these ticks. Then what you all need is the sessions overlap. Okay, tick this, and you can gradually increase the limits as per your device if it's not too much high end. So keep it till 20 or 30. I kept it 40. Okay, as per my system, cause your system will be lagged. Okay, cause there are too many session overlaps will be on your chart, right? Then only check the two ticks, L plus N and London close. Okay, these two will be ticked, and this one will be ticked. Another two, Asia and Asia plus London will be unticked. And below all will be same as well as. Okay, don't change this. Then okay, now say, first of all, I will do this as fast as possible. Okay, first of all, time, session time. Okay, what is session time? Session time is UTC 13 to 18. Okay, 13 to 18. This 5 hours is our trading hour in the whole day. Okay, if you are from India, your time will be 6:30 p.m. evening to 11 p.m. Okay, no, 11:30. Okay, now see, uh, why I said to add this volume indicator. Look at this. Leave this there, and here you can see. Don't look at the charts, okay? Look at the volume bars. Here a new day starts, okay? Let me put a vertical line so you can understand this. Here the new day starts, okay? The whole day volumes are choppy and uneven, okay? But when the exact session time reaches, see, when the exact session time reaches, there is a jump in volume, okay? Then the volume burst increases gradually, indicating a high chance of liquidity and higher liquidity hour. Okay, my accent might differ a little because I already taken a 3 hour session and constantly I was speaking, and I am recording this session again and uploading, so my voice might differ a little bit, but you can understand this, that it's not that non-understandable, not like that. Okay, just say here uh, the volume bar is up, and here the from here exactly the volume increases until the London and New York overlap session closes. Okay, no doubt here's also volume bars, high volume because of this liquidity sweep and high selling, but actual thing is this. Now look at this. Mm, this was the whole day. Okay, there's 22. There was the whole day. Okay, now when this session comes, okay, when this session comes, our trading session at UTC 13, volume increased gradually. Look at this bar. Volume increased gradually. Okay, then dropped a little, then again increased until the session closes. Okay, now see, uh, this was the volume explanation. Now coming to the time. Okay, time is I already mentioned, explained 13 UTC to 18 UTC. This 5 hours is our trading hour. Okay, this 5 hours are our trading hours. Okay, now session time. Second point, POI. This is the most important thing in this strategy. What is POI? Let me explain you. I have to draw this. Okay, see, just think you are an institution. Okay, you are an institution and you have $1 billion in your equity to trade with. Okay, now the asset price is increasing just like this. Okay, you bought 200 million here. 1,000 million equal to 1 billion, right? So you put 200 million here. Market gave an impulse for your orders and your trades. Then you paused for a while to trap some sellers, okay? Because seller thinks if market stops, then they use too many logics for sell down the market, okay? But actually that's a trap totally for the bullish institutions. Now they will put again 200 million, then it goes with another impulse, okay? Now see, just after that, your either your session closes or you pause your system or something happens. You pause your trades, okay? You don't make any transaction thereafter, okay? So there market goes just like this, just like this, just like this. Now when again your session starts and you are looking for buying, right? You are looking for buying, but as an institution, when you have to buy 200 million, not a matter of joke, you have to buy 200 million amount of gold, right? With 200 million equity, you will buy gold. It could be leveraged or non-leveraged, no matter. Now say everyone is trying to buy. Everyone is trying to buy. Why? Because it's already in all-time high. Okay? Everyone is trying to buy. Now buying demand is too high. Selling is low. Very less people are there who wants to sell. Okay, everybody wants to hold or purchase more. Now this is the main thing for you. You as an institution, what you will do here? Last you put your equity here. Okay, you put your equity here, 200 million. So you will think everyone is buying, so there are buying orders. So if I sell 200 million, then I will make some profits. I will exit. Then when it reaches to my break even or entry zone, again I will put another 200 million. Then I will take gradually the market upside. Right? This is a healthy movement. This is called healthy movement. If market is moving like this is very unhealthy, and they all are gonna be swept in only one move. What happened in 21st October 2025? You can see the chart. That was the highest selling in gold or silver in last 12 years. Okay, so this is the main concept, uh, right? So no doubt they put their orders here. You put your 200 million here. Another institution could um, put their money here, but you want to pull the market here. So this will be your entry zone. So you will put your 200 or 400 million or more money, right? Because you are getting more cheap price. You are getting this asset in more cheap price. Okay, you are getting this asset cheaper. Okay, so you will buy again here, then make the market gradually upside. This is the thing. And what is called POI? Any institution's entry zone is your POI, where from where the impulse started. Impulse in the sense any imbalance of fair value gap, any volume imbalance, any types of uh, you can say gap, any types of order block, any types of liquidity void. Okay, but except order block, liquidity, and FVG, what I just pronounced, forget about them. They are different concept. I just want to simplify this to you all. Okay, make it simple. Do not put everything in this. This is very simple. This is not included with SMC, not included with ICT. Okay, I know all of them. I know all of them and I can use all those strategies, but I got the age in this strategy, so I use them. We use them. Okay, and you can't find this strategy specifically nowhere in social media. Literally nowhere in social media. I own self didn't got it. I had to make it on my own. Okay, when you make that thing on your own or make a strategy on your own, so you have an edge on that. Okay, that nobody have. Now, say you understood what is called POI. POI basically a point where a institution puts their money. Now, see, coming to the main topic. First of all, you have to understand what is left behind. Okay, what is left behind? What is left behind? Mm-mm. Okay, uh, okay, okay. See, in the last session, I am showing every sessions. Okay, one to one, I am showing all the sessions. Now see, uh, let me put on a vertical line to the day start. Okay, now see, here market was consolidating. Okay, market was consolidating in the Asia session. Then London session swept the liquidity. Okay, which is a little problem for us that if London session sweeps the previous session liquidity or taps any other session's liquidity, then there will be nothing left for our main session. Okay, so mark out before the session starts. Okay, that what is left behind. I will explain everything. See, when market was there here, then a sudden fall. With this sudden fall, every PY has been tapped. These are the impulses, right? One, two, three, four. These all are the impulses. Okay, so these all are PYs, but they are weak PYs. That's why they all got liquidated. Extreme POI or powerful POI never gets liquidated, or even if gets liquidated, market reverses exactly from that point. Okay. Now say there is a order block left behind. Okay. Either market had to tap this zone or had to tap this zone because there is an order block. Okay. No doubt below there is two. Okay. But if market got sufficient liquidity here, so it won't come downside. Okay. It will play in this zone. It will finish all the games in this zone and take its move. Take it to the asset class high. Okay. Now see what I said. What is left behind? This one was left behind, right? FVG. This is an order block, and this is an uh, you can say this is an internal candle or inside bar candle. Okay. So you can mark this, no problem. Use magnet. Always use magnet for zone markings, which is a candle. Okay, this will be very helpful. Now, see, this swept all those liquidity POI has been tapped. Now, what is left behind? There is no as such FVG order block, nothing left except this and below these zones. Okay. Now see, there is an FVG that is left behind. Okay, there is an FVG that left behind. Now see, just after this, the liquidity sweep happens. Okay, then it liquidates this FVG, uh, fills this liquid FVG. Okay, then there is no order block. Why there is no order block? Let me tell you before explaining FVG. Order block always this candle had to form here, not here. This candle already engulfed the previous candle, so You can't say this is an order block. This is an there is an FVG, so this can't be an order block, right? This is an FVG, what is only left to be tapped. Okay, okay, tap this. You have to be cautious when this wick closes. Okay, when market gives a wick and closes the candle, you have to be cautious that next 5 minutes gonna be crucial for you. Okay, now see, there is a candle formed, a bullish candle. Okay, this will be our confirmation candle. Okay, confirmation candle bullish. Okay, uh, then we will mark 50% fib retracement. Okay, wait, let me put that point here. What is left behind, and here is the entry model. There are total of 6 or 7 entry models. I will show everything here. Okay, I will show everything here. Now see, here market came downside, then bullish candle formed. We have to wait for the candle closing. Okay, now let me tell you something. Do not wait for this candle closing, exact closing. Okay, just let me tell you what you have to do on this time. Okay, this can when it's the time when this candle is going to be closed. Okay, and it's confirmed that it's going to close bullish. Okay, in the last 3 seconds of its closing, you will mark this as fast as possible. Okay, this fib retracement at 50%. Put your limit order just at its 50%. Okay, stop loss below this candle. Okay, as the zone got already tapped and fully liquidated, so you can safely put your stop loss below this candle, no problem. Okay, then market will eventually come to your entry zone, tap your order, then go upside. Okay, now it's a very simple setup you are looking. Okay, it's a very simple setup, right? For which I am speaking this much and telling this much is waiting for you. Okay, because there are too many complicated things left still. Okay, still now those are left behind. Okay, so I will explain them all and teach you. Now see, uh, entry model done. Then where to not panic. Okay, most of the traders does a mistake. What's the mistake? They take partial bookings. Okay, just answer me then when you are taking partials. If you are taking partials booking, profit booking, then why you calculated those risk, reward, uh, targeted profit, stop loss? Why? Why you calculated them? Why you took that risk? If you are exiting at break even, break even means zero profit, zero loss. So you are wasting your time. Either give stop loss or take the TP. Do not personalize or do not change anything in that trade. Your job is to put the limit order at this 50%, following all the rules. After all the rules, then your job is to put the order at 50% and stop loss at the position. This is the only single model I'm showing you. I will show you the another models. Okay, so you will get better understandings. 1:3, then your TP on your system. That's it. Now, where people panics, say if liquidity sweep leaves an FVG or so many FVGs, so if it comes downward, so do not panic. What does that mean? Listen. See, mm, this already left and tiny FVG here. Okay, market tapped and came downside. Right? Why market came downside? There is also an FVG and imbalance formed. Okay, so if there is an FVG or imbalance, there is always an unhealthy movement. So market will definitely feel that and do not panic on that situation. Now see, this looking very good. Like this is looking very amazing, brilliant, and everything you could say. But this thing is looking awesome. But when it's live, your psychology will just get rid of your mind. Okay, so do not panic in this situation when this candle comes here. You already put your stop loss and TP. How much you will lose? You will lose 59 pips, or if you win, you will take 178 pips. That's it. It's simple. This strategy has 70 to 75% or more than that accuracy with 1:3 risk to reward ratio. Whoever attended my session, I explained there that you just need only 25% to be break even with 1:3 and just need 26% to be profitable. No matter that much can be a tiny profit, but you will be profitable 126%. And here you are getting 75 and more than that accuracy, but I am taking approximately 70% accuracy. Okay, so if you lose 1 hour, then you will earn another 3 hour in next trade. So why you are panicking? You will be always in profitable if you follow rules. Strategy is powerful, no doubt. Everybody creates their own strategy. Most of the people create their own strategy, or they sees any other influencers videos on Instagram or YouTube or any other from any other sources. Every strategy is powerful and profitable. You have to just match it with the proper risk management and psychology, how it's working and what's the pros and cons of that strategy. If you understand them, you won't panic. You will be always profitable. Nobody can bring you down or bring down you. Okay. Now see, this order FVG was left, market came downside, tapped this, then again upside impulse. Now see where market was gone. Almost 3x of the my target. Okay. Now see, just focus on this session. Okay, just this session, and in other sessions, look for what is left behind. Now see, here is a ranging market. Okay, here is an sorry, here is a ranging market. Okay. Now say do not look for upside liquidity, look for downside liquidity always, okay? Cause gold is an upward instrument, right? Gold is an upward instrument. So in daily time, if you look at daily time frame, it moves like this. Always after few days, it breaks its structure and grows gradually upside. Okay, there's very less chance that gold moves in a choppy zone, okay, where it will work like just a roof above its head and a floor below its feet. Okay, so there you can look for upside liquidity, downside liquidity. Okay, but it's already bullish totally in daily time frame, so you have to take bullish. You have to mark downside liquidity for bullish trades. Okay, my voice is breaking a little. Okay, now see. Okay, now see, uh, in this session starts from here, right? Here. This is UTC time. Okay, keep this in your that in your mind. In Indian time, it will be 4:30 a.m. Okay, 4:30 a.m. in Indian Standard Time. Gold or XAUUSD starts. Okay, now see here a choppy zone, then upside, upside, upside. Then we will take decisions before 15 minutes of this session starts. Okay, so the 15 minutes before this is this candle. Okay, this one candle. We have to look now. We have to look for what is left behind. Now see, here is an order block. Don't look for it. There is no structural break thereafter, so you can't take it. Liquidity sweep always happens at a POY. POY never POY is never an order block which is resting just below the current market price. Okay, just below the current market price. So this is not invalid. There is a liquidity resting below this wicks. Okay, below this wicks. Now see that if liquidity is not resting, then this move wasn't possible. Okay, this move wasn't possible if the liquidity is not resting in this zone. Okay, now find POIs. This is an POI. This is an this a POI. This is a POI, and this is not a POI but liquidity zone. Okay, there is a liquidity. This is a liquidity void. Why? Because there is an FVG. Right now, see in if you shift into 1 minute time frame, you will see there is an all FVGs filled. Okay, there is a but this one is not filled. I am on 5 minute time frame. Okay, wait, I just forgot to put the time frame. Everything will be on 5 minute time frame. Okay, time frame 5 minutes. Okay, now see either market have to has to take this one, or this one. We will go as market reacts on these three zones. Okay, now see market sweep the liquidity exactly on our session time. Okay, and with high liquidity, no problem. But this didn't take the liquidity of this one, our marked zones below. Okay, now it went upside, then another liquidity sweep. This is the valid liquidity sweep. Okay, now see we will wait for a 5 minute closing along with wicks below. If there is no wicks, do not enter. Okay, either it has to be wicks before this or in at this last candle. Okay, what is why wick is important in liquidity? Wick equal to liquidity absorption. Okay, in simple language, wicks equal to liquidity absorption. So here all the liquidity absorbed, here all the liquidity absorbed. That's why the wicks formed and upside. Okay, now see here's the thing comes. In the last example, I said you have to mark 50%, but here I didn't mark 50%. Why? Why I didn't mark 50%? Because the already candle size is 48 pips. Okay, like my stop loss is 48 pips. Stop loss below this zone, 48 pips. Why I entered here. Okay, now coming to the next topic, stop loss. Stop loss. Stop loss. Wait. Uh, Stop loss will be always less than 100 pips. Stop loss will be always less than 100 pips. 100 pips in the sense $10 movement in gold. Okay, $10 move equal to 100 pips in XAUUSD. It differs from person to person how they calculates pips. Okay, but for me, 100 pips equal to $10 movement. Okay, now see, it's less. It feel that SL condition. Okay, it's less than 100 pips. It's 48 pips. Now we will directly enter at this candle. Okay, then target 1 is to 3 and it will be hit our TP eventually. Okay, now let me tell you a thing what I was explaining at the panic time, that if there is an FVG left while this move, if market comes to this one or your entry zone, do not panic. It will hit your TP. 90% chance that it will hit your TP because it's giving you the second time chance to re-enter and take your TP. But you don't have to re-enter on that zone because your entry will be there. That is reconfirmation. Okay. Now see, hopefully this is a good move that market didn't tap this FVG and went upside. Okay. Now where you have to mark 50%. Look at this. Eh, Uh, this body must not be body and wick must not be more than 100 pips. Okay, it must not be more than 100 pips. If it's more than 100 pips, then take 50% of the only body, not wicks, only body fib retracement. Let me tell you the fib settings, fib retracement settings. Okay, just check the ticks of 0, 1 and 0.5. Rest will be unchecked. Rest ticks will be unchecked. Okay. So use your calculator, sorry, not calculator, use your magnet on your chart, okay, and quickly mark 50%, put your limit order at 0.5, stop loss below this, and 1 is to 3, target hit. That's it. You will close your day, okay. If you miss this one, what you will do? You will wait for the next session, okay. Means it's totally a whole a session, but uh, this is the main session where more volume comes. Okay, now see what I said. What is look for what is left behind. You will you could say that there is an FVG left behind and order block left behind. If these two things were left behind, no doubt it's an order block. But if it's an FVG and left behind, so this candle must tap that FVG, but it didn't. It directly went upside. Okay, it's mean in lower time frame it's already mitigated this FVG, right? Now see only one FVG is left to be tapped. Okay, rest everything is tapped in this zone. Okay, not below this. Now you mark these zones not means that in next session market will tap this zone and will move upside. Market will never move like you think. Market will move like as it moves naturally. Your strategy must be work with that nature. Your strategy must be working with that nature. Okay. Now see here and liquidity sweep happens again after workout formation. Then creates a wick and wick, then again a bullish candle impulse We have to wait for this follow through. Mark this 50%. Okay. Say I marked 50% of this. Okay. Put your limit order. Say just market tab this order and went upside. Your stop loss below this one. Say the stop loss is 99 pips, not 100. Okay. 1:3 target hit. Okay. Another example is here. I did some mistakes here. Okay. I did some mistakes here. I will tell you everything. Okay. I will tell you everything. I won't hide anything from you guys. Okay. Now see, if HA session gives an impulse, okay, impulse in the sense a continuation move, okay. Say the day starts from here. Asia session and London session already kept that move, and in London session, it sweep the liquidity. Which one? See, as I explained earlier, that if there is no order block before that FVG, so mark that FVG. There is no order block. Why? Because this candle already engulfed this candle. Okay, so we will mark the FVG as a POI point. Okay, but there is so many POIs. This one, this one, this one. So which one is going to be respected, right? The respected one will be this and this, where market is reacting, not we are predicting. Okay, keep this thing in your mind. Now see, there is another FVG and order block left. Okay, market came in that zone, shown an bullish candle, then an impulse. Now see how we will enter. Okay, like if you enter here and like if you enter at the closing of this candle and put your stop loss just below this, no doubt your stop loss gonna be hit. Okay, because this candle engulfed the liquidity of the previous candle. Okay, this all five candles are liquidity absorption candle. Okay, now see, this is an impulsive move. All right, this is an impulsive move and follow through candle. So we will wait to form this follow through candle. Now just 3 seconds left for closing this candle. We will mark the 50%, put our stop loss, put our limit order at this point and stop loss below this point, and 1:3 TP hit. Okay, but this is not our trading time or session, so we will not trade in this zone. Okay, we will trade in this zone. What went wrong? Let me tell you. Always focus on the news. Okay, always focus on the news, cause that might fail your whole strategy and your psychology. Okay, what happened to me? Let me tell you. I was waiting. See, what is left behind? Again, what is left behind? There is an order block. This is not valid because a POI cannot be an order block which is just below the current price. Okay, so this is the order block is left behind. Okay, no doubt there is no FVG, but this is an order block. Why? Because from here the impulse started, and except that this is an order block and FVG which already tapped. Okay, so this is invalid. This one is valid, and if market comes towards moves towards down, so this two will be the POI. Okay, because this one is an order block, and at upside there is an FVG, and here is also an impulse, and there is an FVG. So this will be the order block, determined order block. Okay, now see, no doubt this also can be, but this is a choppy zone. As such, no impulses shown. Now see, I was waiting for this zone to be tapped, okay? So market tapped this zone and instantly went upside, okay? And I put my stop loss totally wrong. You can see I had to put my stop loss below this, not here. Okay, I put my stop loss wrong. Entered entry was right, but stop loss was wrong. Now see, here was the Trump news time. Okay, Trump speech time it was. So it hit my stop loss and trapped totally. Then again, see, this is a liquidity absorption candle. Again, liquidity absorbed. Then the move become choppy. What does that mean? The move is going to be reverse. Okay. Then see in 5 minute time frame there is a tiny bullish candle formed. Okay. So you can see here is an fib retracement because I took entry on 3 minute time frame. Okay, but I will never advise you to do that in 3 minute time frame. I will tell you when to shift in 3 minute time frame. Everything you have to do in 5 minute time frame. Okay, not in other time frames. Now see after closing of this candle, I will enter at just 2 or 3 seconds before this candle closes and stop loss below this and 1 is to 3 TP hit. Okay. Then again, if I have if you have missed this move, then you can wait for this one. Now see here the 3 minute time frame comes. Okay. Now see there is a small wick left behind and in 3 minute time frame where it is here here it is. In 3 minute time frame, you can see already this candle formed. Okay, so this candle size is big, so more than 100 pips. Okay, so more the whole size is more than 100 pips. So we will take our entry in the 50%. Okay, now say in the 50% we will mark and just before 3 seconds before the candle closes, we will put our limit order and stop loss just below this and 1 is to 3 TP in system. Okay, that's it. Now see here. Same thing happened. You just have to know where liquidity is going to be stopped. Okay. And extremely sorry because I didn't mention that in here in this list. Okay. Where liquidity sweep is going to be stopped. Okay. You have to know that. Now see what I said. There is two POIs. Market came gradually downside. Okay, this was sudden selling. Always remember this thing that in any asset class, any trading, any asset class, any stock, any index, selling always happens in panic. Okay, selling always happens in panic, buying always happens in greed. Okay, if something is moving upward, so in FOMO or in greed, people buys it. Most of the people. Okay, and when it comes downward, people gets weak-handed and they eventually exits the market, and at that same time institutions take that advantage of liquidity. Okay, now see Here is a weak. Do not don't get trapped here. Okay. But I said you have to look for a bullish candle. No doubt this is a bullish candle, but do not look until do not wait. Sorry. Wait a second. Yeah. Do not focus on this candle until it's getting stopped or reacting at this zone or your marked POI zone in 5 minute time frame. Okay. Look at 5 minute time frame only. Okay. Then when it's showing its structure here, then you have to change your time frame to 3 minutes. Okay. If you are getting a 5 minute better candle closing or formation, so definitely go with it. But if in 3 minutes time frame it's needed, then go with it. Okay. Now see, here's an POI, both are tapped. Okay. Now this is an liquidity absorption candle. Okay. So liquidity absorption, this is an different liquidity absorption candle. Why? Because this left a wick below and body upside. Okay. Now you can mark this one as your 50% fifth retracement, then you can enter here. Okay, because this is an bearish candle, right? So you can do that. That will be in premium zone, right? So just 3 or 4 second closing left, then enter and put your stop loss just below this, because already this all tapped. Okay, then 1:3 target hit, but this is not in our target session time, so don't trade it. Okay. In this example, again, I will shift in 5 minute time frame. Now see another entry model. Look at this, another entry model. Here the day starts. Initial session gave an impulsive move, but not like impulsive move. It's very sideways upside, you can say. Okay, because very tiny bullish candles formed. Okay, then in London session it swept the last swing. Okay, then in New York and London overlap session, which is our trading session like this. Okay, this is the trading session of us. So in this, market came downside. Okay, now see, but this is an POI, this is an POI, nothing left behind. Okay, nothing left behind. This or this one is left. Okay, now say just tapped this one. You have to keep patient until this POI gets tapped. Okay, now see this candle absorbed the liquidity, then no follow through candle formed. If you entered at this candle closing, so no doubt this candle had to wipe out your stop loss or hit your stop loss. Okay, now see this bullish candle formed. Okay, we have to buy in the discount zone. That's why we will mark instantly or as quick as possible. We will mark this with our magnet. The body will be marked, and then we will put our limit order when 3 or 2 second left for the candle closing of this candle. Okay, then say market came downside and tapped the order, then hit the TP, put your stop loss below this. Okay, and here the same thing. What I said, always look for what is left behind, and market is not going to move as you predict. Market will only move how it reacts. Okay, now say in this session, okay, New York main session, it swept the another liquidity. Okay, see, you can say that this is another liquidity sweep. Okay, no doubt, this is a liquidity sweep. But there is no POI left. There is an POI just below this. See, this is an POI. Why? Because there is a very small, there is a very small FPG left. Okay, and from there, from here, the liquid impulse move started. Okay, so you have to wait for this POI to be tapped. If you missed this one, okay, I will advise you to take only one trade in every day. No matter it's TP hit or stop loss hit, take only one trade. Okay, now see this one tapped. Okay, then you have to wait for the follow through candle. Now see, as I said, the conditions that you have there must be wicks. Okay, candle all market already swept the liquidity. Okay, so market already swept the lower level liquidity. This is internal liquidity, and these are external liquidity. Okay, this is internal liquidity because market is in this swing range. Okay, this swing range, internal liquidity. Now see, this impulsive candle closes, then we will put our in order, limit order at 50% of the next candle, like this candle, but this will be tapped just after that. Okay, so at 50% and stop loss just below that. Okay, or you can put a little buffer and target 1:3. Now see what I was talking about, panic. Okay, now see, there is they already left an FVG, it failed. Okay, then when it was filled, getting filled, another FVG was the market left here. Okay, now see, this candle came, sweep the all liquidity of this FVG, and then this candle formed, sweep the liquidity of this candle, and another candle came and just tapped the entry, then went upside. That's it. That's it. Okay, this strategy is very simple, and on that live stream, and also you can check my telegram, I told you all that this was the off market session. Why? Because this was the America bank holiday. Okay, on the whole day, so market went sideways after this impulsive move, extreme impulsive move in Asia session. I was waiting for this point to be tapped. Okay, because this is an POI, right? But eventually this didn't happen, wasn't happen, and we have to plan another in different scenario. Okay, this is how we have to react, not like uh, you plan. Okay, you have to change your plan dynamically according to the market nature. Okay, now see here the same thing happens. Here I use the weak logic of wicks. Okay, now see, here is an order block which tapped here, and in this session market totally went sideways, 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 and this one came downside and tapped this weak. Weak means also there is orders left. There's orders left. Okay, now say uh, now say this tapped this weak liquidity. Okay, not totally liquidated these weeks, but tapped this liquidity, then went upside. Now here is another entry model. This is the fourth liquidity model. Okay, liquidity entry model. Now see, this three candle is a liquidity absorption candle, right? You have to keep patience for this. This was left behind. This was left tapped here, but this was the important area which was left behind to be tapped. Okay, now see, here's the impulsive selling candle comes, and this one is a candle when we got our follow through. Okay, now see, follow through candle means bullish candle. Okay, now we will put our entry limit order at 50% of the bullish candle's body, okay? Then put our stop loss just below that. But if you put here, so your stop loss gonna be hit definitely. But if there is a zone and it's under 100 pips, so I will prefer you to put your stop loss below that zone, not just below the candle, because gold and silver is the only instrument you can see where in every 5 minute time frame candles moves like it takes the previous candle's lower liquidity or upside liquidity, then continues the move. Always this happens. You can see. Now see, this tapped came. Okay, now see, this all happened, and only that one person can catch this move who have patience. Here, here, here. This all cost you, or this all will cost you your patience, okay? And your reward will be amazing. You will enjoy it forever. Now see, next session, again this thing happens. A huge liquidity sweep happens, and what example I just shown you all just before the starting the session, that institutions order POI, order block POI with uh, equity, right? See, market tapped this zone, clearly gave us a move, okay, and at 50% of this candle, bullish candle, we will put our limit order, then entry, stop loss below this zone, okay. There's 100 pips, no problem, but not above that. Do not take that, okay. But you can take your entry a little bit lower of the 50%, okay. That's not a problem, okay. Now see, this went gradually upside and hit the TP, okay. Now here I actually booked some losses, okay, huge losses, like almost $5,000 to $6,000 of losses I booked in just 3 to 4 seconds. How? I was using my phone actually on that time, and my phone suddenly went from portrait mode to landscape mode. So my order, MT5 order placing position changed, and where it had to sell, has to buy, it put sell orders, and instantly I had to exit, so gone. Again, I recovered those all with 10 lots. Okay, just only 10 lots. I shared that on my Telegram. You can scroll my Telegram channel. You can see that. Okay. Now say if you had missed this one, so then you can enter at this zone. Okay. Now see here again, same logic. What is left behind? This one is an order block, no doubt. But there is no as such conditions met, okay, because we need weeks before the follow through candle. See, the weeks are after the follow through candle, so it's totally invalid. One condition didn't met, so ignore that. Say here the selling candle, selling came, liquidity sweep happened. There is the POI, okay. Tap this, then we will get cautious for the entry. This candle follow through candle forms, we will mark the 50% limit order at the 50% of this candle's body, Stop loss below this candle is weak. 1:3. Done. That's it. This is how things will work. Okay. Uh, so now here, this is the last example I'm going to show you, and this is the last example where my strategy strategy was right, everything was right, but for the market nature, it got stop loss hit. Okay. After these two examples, I will tell you the terms and conditions again. I will revise them all. Then I will close this session. Okay. Now see, always look for what left you behind, right? See, in this session, this was the order block, and each session tapped this zone, sweep this zone, then upside, right? Just after that, market created a very noisy, shitty zone here. Okay, now see, there is nothing left behind to be tapped except this one. Okay, and this FVG is left. Market came downside. Okay, market came downside. Do not take this as a do not mark this as your liquidity candle. No doubt there are weeks, so many weeks, but there is no as such POIs which has tapped. Okay, so this move came went downside. Okay, see, here is an bullish candle. Okay, but there is no POI tapped, so ignore that. Then again a selling candle, then again bullish impulse, but no POI tapped. Then this was the time when wick left behind and tapped this FVG. Okay, so what I said, POI can be liquidity wicks. Okay, liquidity wicks, order block, or an FVG. Okay, now say market didn't respected this order block, market respected this FVG, this FVG. Okay, so what you will do, take your order at 50% of this candle and stop loss below this. Now say 50% of this candle, 50% of this candle. Okay, what I said that see, it's a little bit more than 100 pips. So put your order a little bit lower and stop loss below this. Now see 99 pips. Okay, say market took hours of time to be tapped and then hit the TP. Done. Okay, this is the thing you have to understand here. Okay, now see, this is the last example I'm going to show you. See, in this session, what is left behind? This order block, okay, and this order block. No doubt, market respected this order block, but hit the TP. Okay, sorry, hit the stop loss. Okay, okay. Sorry for the noise. Now see, uh, here the impulse comes, and this wicks market left wicks below this candles and follow through candle forms. Then we will mark the 50% zone of this with fib retracement just 2 or 3 seconds before this. Okay, then limit order at this 50% zone, then stop loss below this and this. Done. Okay, then stop loss it. Okay, this was the only day when my stop loss got hit, else there's no stop loss hit uh, in any trades since 15th December. You can see, oh, you can see all these here. Okay, all these here. You can see all this here. Okay, now as this stream is private, so I am telling you, if you have any confusion about anything, comment here. I will mark your name and you have to join the session on Google Meet when we discuss everything and teach everything. So there I will solve your problem. Okay. Now you have to backtest this strategy as I said. Okay. And follow all the rules I said and this. Okay. There is almost 6 to 7 entry models are there. Okay. I told you six entry models. Okay. Another one is left, one or two is left. Then that's not a problem. You will learn it in backtest. Okay. And RRR 1:3 always. Always. Okay. These are the rules and all the backtest I shown you. Okay. And whoever joined my session meeting, they will know everything about this. I explained everything there. Okay. So do not forget to subscribe this channel cause anything I arrange like any session, any meeting with you guys on Telegram, on Google Meet or Zoom, I will share the recording on this YouTube channel unlisted. Okay, I will share the link so that you can only you guys can get access of that sessions. Okay, so this is it. I'm closing the session. Okay, and I have to take some rest. Okay, because it's more than 7 hours consecutively. I am speaking constantly. Okay, so that's it. Thanks to you all for this much support. Hopefully, you all will support in future more than this. Okay. Good night. Have a rich dream.